When it comes to paying your mortgage faster, there is a lot of snake oil on YouTube on how you can get a HELOC or an additional loan with a higher interest rate to pay down towards your principal. Well, that may work in some cases, but it definitely comes with a lot of risk as you're taking a loan at a higher interest rate, somewhere around 10 to 20%, which can definitely add up by the time you pay it off and would actually end up harming you financially in long term rather than helping to pay off your mortgage faster. So in this video, I'm going to walk you through 4 key things that you can do in order to pay your mortgage faster. Hey everyone, it's Nikhil Moore, your frugal investor here, and welcome to my channel. Before I walk you through the key steps on how to pay down your mortgage faster, it is really important to understand how mortgage works. A mortgage is a loan you get from a lender or a bank to finance your home purchase. When you take out a mortgage, you promise to repay the money to the lender you have borrowed at an agreed upon interest rate in that time duration. For the purpose of this video, let's consider you took a mortgage for $400,000 for 3% interest rate for 30 years. In that case, your monthly payment will be $1,686.42. And if you continue to make the monthly payment of $600 for the next 30 years, you will end up paying $607,108.95 in total, which includes your principal of $400,000 and $207,108.95 in interest. So basically, you're paying 50% of your principal to the bank over the next 30 years just to own your home. Wait, what? How? How is this even possible? Okay, so here is a quick view of your amortization schedule. The amortization schedule gives you a breakdown of your monthly mortgage payment. It basically shows you how much money from your monthly mortgage payment will go towards interest and principal. And as you can see in our example of monthly mortgage payment of $1,686.42 for $400,000 mortgage, in first month $1,000 will be paid towards interest and $686.42 will be paid towards principal. And for the next month, our mortgage will go down by $686.42. And the next month's amortization will be calculated based on this number. And if you notice, over time, the amount paid towards your interest will gradually decrease and the amount paid towards your principal will increase. And exactly after 84 monthly payments, which is after 6 years, your monthly mortgage contribution towards principal will be greater compared to the interest payments. And that's how mortgage works. And now that we have cleared our understanding of how the mortgage and the amortization schedule works, here are 3 things that you can do to pay off your mortgage faster. But before we move ahead, I would really appreciate if you can smash that subscribe button if you would like to watch videos like this or want to learn more about personal finance in general. Alright, moving to our number 1 tip, make extra payment every month. It's really as simple as it sounds and it works pretty well. Let's say in our example where we took a mortgage of $400,000 for 30 years at 3% interest rate. In the lifetime of the loan, if we continue to make a monthly payment of $1,686, we would end up paying $207,108.95 in interest. And this mortgage would end in 2051. But take a look at this. By just making an extra payment of $100 each month, you would end up paying $187,147.16 in interest. That's a saving of $19,961. And you would also end this mortgage 2 years and 7 months early. But wait, check this out. If you made an extra payment of $300 each month, you would save $49,906.60 in interest and would end this mortgage 6 years and 7 months early. That's really cool. There you go. It's really interesting to see how much money in interest you would save by just making $100 to $300 in extra payments each month. Feel free to check out the link to the mortgage calculator in the description below to see how much money you can save on your mortgage. It's really simple. The less money you owe to the lender, the faster you pay your mortgage and save thousands of dollars in interest in the process. Alright, moving to the next step, which is making bi-weekly payments instead of monthly mortgage payments. And again, that's as easy as it sounds. Instead of making monthly mortgage payment, you just make the payments every 2 weeks. There is no change in how much you pay. It's just that you're paying half of your monthly mortgage payment every 2 weeks. In our example, you'll be paying $843.21 every 2 weeks. And as you can see, instead of paying $207,000 in interest, you would end up paying $178,000 in interest for the entirety of the loan. That's a saving of $28,557.48 in interest for our $400,000 loan at 3% interest rate. And you would end up closing your mortgage 4 years early. So basically when you're making bi-weekly payments, you're saving more money on interest and you basically pay your mortgage down faster than you would make payments once a month. When you decide to make bi-weekly payments instead of monthly payments, you're using the yearly calendar to your benefit. By making payments every 2 weeks, you will be making 26 payments per year instead of 12 payments. While each payment is equal to half the monthly amount, you end up paying an extra month per year with this method. Well, there are a few things to remember before you make that switch. Some lenders may charge you fees to enroll into their bi-weekly payment plan, and you will need to talk to your lender about how this would affect your mortgage. Make sure you call them up and ask if the extra payment is going towards your principal. In my case, lender asked me to make 2 months of mortgage payment in advance, and they also asked me to fill out this form before 15th of the current month to make the switch. Alright, the next step is slightly difficult but definitely will save you most amount of time and money in interest towards your mortgage. And that is pretending as if you're paying for 15 years mortgage. I don't really think everyone can do that, but hear me out. In our example of $400,000 mortgage for 30 years at 3% interest rate, our monthly payment comes down to $1,686.42. And if we just change the mortgage payment to 15 years, the monthly payment would be $2,762.33. That is $1,075.91 extra compared to the 30 years mortgage monthly payment. And if we make this $1,075.91 of extra payment each month towards our 30 years mortgage, we would save almost $109,279.82 in interest and would close our mortgage 14 years and 11 months sooner. I know, it's not that everyone can afford to do that, but I just wanted to share this really powerful way to save your money. And by the way, you don't have to make these extra payments each month, it's just whenever possible. Maybe you can afford it to do it twice or thrice a year. You will still save ton of money. Lenders are not going to ask you for this extra payment each month.
Hey, where is my money?
Alright, there you go. These were the 3 tips to pay down your mortgage faster. And if you follow these 3 things, you're not going to only end up paying your mortgage faster, but also build your equity on the way. Okay, for any reason, if I provided any value to you today, please drop a like on this video and subscribe to my channel. If you would like to learn more about personal finance in general, you can click on this playlist here and see you in the next one.